Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today, we're diving into HNI Corporation's latest proxy statement. It's a document that might seem boring at first glance, but trust me, there are some interesting secrets hidden within, especially when it comes to how much the top executives are making and how they're running the show. You might be surprised. Let's start with the basics. HNI is having their annual shareholder meeting in May of 2025. So you'll get to vote on who sits on the board of directors. Three people are up for re-election: Jeffrey Loranger, Larry Porcelato, and David Roberts. The board is recommending you vote for all three. Now, who is in charge of HNI? Well, that's the board of directors. They are supposed to keep an eye on the business and give advice to the CEO and other top managers. During 2024, the board consisted of 10 directors until June, when it expanded to 11 members. The board splits up some of the work into committees. There's the audit committee, which makes sure the finances are in order. Then there's the compensation committee. This is where things get interesting because they decide how much the executives get paid. And finally, there's the governance committee, which deals with how the company is run overall. All these committees are made up of independent directors, meaning they're not employees of HNI and are there to represent the shareholders. One thing to note, Jeffrey Loranger is both the chairman of the board and the CEO. Some people think it's better to split those roles, so one person isn't too powerful, but HNI believes it works best for them to have Loranger in both positions. However, they do have a lead director, Miguel Calado, to make sure the independent directors have a voice. The board is also in charge of risk oversight, making sure the company isn't taking too many chances. The audit committee takes the lead on this, discussing major risks with management and the external auditors, with cybersecurity being a key area of focus. These days, companies are increasingly focused on corporate social responsibility, and HNI is no different, with environmental, social, and governance goals to address climate change, reduce waste, and source renewable energy. Various board committees oversee different parts of the program, from regulatory compliance to employee development. To prevent any shady deals, HNI has a policy for reviewing transactions with related persons, like executives or major shareholders. Any deal over $100,000 has to be reviewed by the audit committee to make sure it's fair to the company. The proxy statement lays out the skills and experience each director brings to the table, which include financial reporting, people development, executive management, and technology. It is important to have a diverse mix of skills to guide the company. Now let's talk money. The non-employee directors get paid a retainer, part in cash and part in stock, for being on the board. The lead director and committee chairs get extra cash retainers. For example, in 2024, each non-employee director received an annual retainer of $208,000. Here's what happened with the audit committee. The committee recommended to the board that the consolidated financial statements be included in the corporation's annual report on Form 10-K. That means they looked over the numbers and vouched for their accuracy. The company paid KPMG, their independent accounting firm, millions of dollars in 2024. Most of that was for audit fees, but some was for tax services. All of these services were approved ahead of time by the audit committee. For 2024, the audit fees were $3,150,000. Shareholders also get to vote on whether to ratify the appointment of KPMG as the company's independent accounting firm for the coming year. Again, the board is recommending that shareholders vote for. Every year, shareholders get an advisory vote on executive compensation. This isn't binding, but the board does pay attention to how shareholders vote. So this is your chance to weigh in on whether you think the executives are being paid fairly. The board recommends you vote for adoption of the resolution approving the compensation of the named executive officers. Time to dig into the good stuff: executive pay. The named executive officers for 2024 were Jeffrey Loranger, Marshall Bridges, Vincent Berger II, Stephen Bradford, and B. Brandon Bullock III. These are the folks whose pay packages are under scrutiny. In 2024, HNI delivered strong performance. The consolidated results provided significant cash flows, and the corporation ended the year with a strong balance sheet reflecting modest debt. The main components of executive pay are base salary, annual incentives, and long-term incentives. Base salary is just their regular paycheck. Annual incentives are bonuses based on the company's performance that year. And long-term incentives are things like stock options, designed to reward executives for increasing the company's value over several years. Last year, almost everyone, about 95%, voted to approve the executive pay packages, so shareholders have generally been happy with how HNI is compensating its top people. To figure out how much to pay its executives, HNI looks at what other similar companies are paying. They have a peer group of about 20 companies, including A.O. Smith, Kennametal, and La-Z-Boy. HNI then benchmarks its executive pay against this group. The compensation committee decides on base salaries based on market data, individual performance, and experience. In 2024, most of the named executive officers got a raise of about 3.5 to 4%. But the CEO, Jeffrey Loranger, kept his base salary the same. The annual incentive plan is where executives can earn bonuses based on the company's financial performance and their individual goals. For 2024, 80% of the bonus was tied to financial performance, and 20% was tied to individual objectives. The financial goal was based on adjusted EBIT, that is, adjusted earnings before interest and taxes, of $221.6 million. HNI actually achieved $220.8 million, so slightly under target. Factors like greater than anticipated benefits from productivity, cost reduction efforts, and lower input costs mostly offset greater than expected volume declines. Here's where the big bucks come in. Long-term incentives are designed to reward executives for long-term value creation. These incentives are usually in the form of restricted stock units, RSU, and performance share units, PSUs. PSUs are like stock options that vest only if the company hits certain performance targets, in this case, adjusted EBITDA targets over a 3-year period. These encourage executives to focus on long-term growth. RSUs are shares of stock that vest over time, encouraging executives to stay with the company. They are easier to get because the company doesn't need to hit particular targets. HNI has a supplemental income plan to make up for limitations in the 401k and profit-sharing plans. This ensures executives get the full retirement benefits they would have received without those limits. The company also offers a deferred compensation plan, allowing executives to save pre-tax dollars for retirement. To make sure executives' interests are aligned with shareholders, HNI has stock ownership guidelines. The CEO has to hold stock worth 5 times his base salary, and other executives have to hold stock worth 3 times their base salary. Alright, let's get to the numbers. The summary compensation table shows the total compensation for the named executive officers. You can see their salaries, bonuses, stock awards, and other compensation. For example, Jeffrey Loranger's total compensation was over $7 million, a lot of money. This table shows the potential payouts executives could receive under the incentive plans, both in cash and in stock. It gives you an idea of the range of compensation they could earn based on performance. Here you can see all the stock options, restricted stock, and performance shares that the executives hold. This is a good way to gauge how much skin they have in the game. This table shows how much the executives made from exercising stock options and when restricted stock vested, turning into actual shares. It gives you a sense of how they've profited from the company's past performance. Here's what happens if the company gets bought out and the executives get fired. They have change in control agreements that provide severance payments and other benefits. This is designed to protect them if they lose their jobs due to a takeover. This section is mainly about how the company delivers these proxy materials to you. Now, what's my take on all this? HNI seems to be doing pretty well. The company is profitable and they're trying to be responsible corporate citizens. But is it all perfect? One thing that always raises an eyebrow is executive compensation. Is it justified? Loranger had over $7 million in total compensation. That's a lot of money. While stock performance is important, a lot of the actual earnings seem to come from cost reduction. One area of risk is the reliance on acquisitions. Buying other companies can be a good way to grow, but it also comes with challenges like integrating those companies and making sure they're a good fit. Overall, I'd say HNI is in a pretty solid position. It is important to monitor the company's debt and its ability to integrate those acquisitions that they make. It all comes down to execution and how well they manage those risks. Thanks for watching. If you found this decoding helpful, please subscribe to the Corporate Decoder so we can keep doing more videos like this, and like and comment below.